The decision that they're going to have to make is not whether they leave rates on hold or whether they cut by 25, but rather that they're going to cut. And then the question is, what is the magnitude of that rate cut?
Welcome to The Business. Is the April survey a window into how the initial tariff announcements from the US weighed on business confidence?
Yeah, that's right. We were really looking forward to seeing the results of this survey because, as we know, there was a fair bit going on in the month of April. So we had the Liberation Day announcement, and then we had the walkback or the pause, I guess, of that announcement a week later. And so we were really keen to see how Australian businesses were thinking about that and reacting to that because, to be honest, data that we saw through the month of April from offshore really did reflect growing anxiety, particularly in the US, by business about the overall shift in trade policy. One thing I think we should be aware of is that our survey was taken in the last week of April, and so actually what we found was business confidence went up a little bit, business conditions came down, but broadly the headline measures of our survey did not really move that much, and perhaps that just reflects the fact that the survey was taken at the end of the month, and so there was a sense, I guess, that things had calmed down a little bit. Financial markets had rebounded, so equities had raised some of those losses they initially made earlier in the month. And so because of that, it was really a survey, I think, that on the surface at least reflects a steady as she goes approach by Australian businesses.
But the survey results did show a sharp decline in capital expenditure as well as softer forward orders. Did the degree of those declines surprise you?
Yes, that's right. And I think this is probably the slightly worrying or concerning part of the survey is that when we actually look under the hood or into the details, what we do see is, as you said, big decline in capex. Forward orders basically haven't moved for the last couple of months, and that's a really good leading indicator of economic activity in Australia. So sort of tells us that the economy is not decelerating, but nor is it really picking up. And also the measure of profitability declined, and that's quite a worrying one as well, because what it tells us is that businesses are finding overall conditions quite challenging at the moment, and that's being reflected in pressures on margins. And so we're going to be watching that one pretty carefully because my sense would be that if that trend sustains in coming months, so we see further declines in profitability, then that might start to ring some alarm bells in terms of what that might imply for the labour market outlook. So, while the headline indices didn't move a lot, there was a bit of movement under the surface and unfortunately probably not in an overly constructive direction.
The jobless rate currently stands at 4.1%. We'll get an update from the ABS on Thursday. Do you expect the jobless number to rise?
No, we don't. So in our forecast at NAB, we've got the unemployment rate staying unchanged at 4.1% in the month. So no real move there. But I think what we need to remember about the labour market is that it is a lagging indicator of economic activity. So if something, worrying is going on in the economy, it's probably not the labour market data that are going to be give us the first read on that dynamic. And so we actually think that the labour market numbers on Thursday will look okay and provide some comfort, I guess, to the central bank who are meeting next week that at least in terms of what they know up until the month of April, the labour market actually looked pretty good.
That was my next question. I was going to ask you what this all means for the Reserve Bank board meeting next week. Is it going to be more or less inclined to cut come Tuesday?
I definitely think that the Reserve Bank will be cutting rates when they sit down to make their decision next week. And the reason for that is just simply that they acknowledged, even after the rate cut in February, that the overall setting of monetary policy here in Australia is restrictive. And so what that means is that interest rates and financial conditions more broadly are acting as a bit of a headwind on the economy. And they also did point to the May meeting as really the meeting where they feel like they've got a really good opportunity just to sort of rethink the monetary policy outlook. And so sort of signal to us that they're going to be having a pretty deep think about whether a cash rate in the low fours is actually the right number. And so my sense is that the bank is going to take the decision that, with everything going on globally and maybe some signs that the economy doesn't have as much momentum behind it as perhaps the Reserve Bank expected it to in the first 6 months of this year, it's probably a wise decision to move policy fairly quickly to an overall neutral setting where it's not really acting as a headwind, but nor is it acting I guess, as a stimulant to the overall economy. And that's a really great position for the bank to be in if they can get there quite quickly, because it gives them maximum flexibility to respond to a situation which we know, at least globally, seems to be changing far more rapidly than we're probably used to.
Does that mean NAB's holding firm to its forecast for an emergency-sized rate cut of 50 basis points?
Yeah, so that's right. So I think when the board sits down next Tuesday, the decision that they're going to have to make is not whether they leave rates on hold or whether they cut by 25, but rather that they're going to cut. And then the question is, what is the magnitude of that rate cut? So is it going to be 25 or is it going to be 50? And so, in our sense, I don't think we would describe it as an emergency rate cut. We would just say, one way to think about this is that when the bank last met in early April, that was just before Liberation Day and all the news flow that we've had over the last 5 or 6 weeks. And I think if they took what they know today and said, well, if we knew that back in early April, would we have cut rates? I think the answer to that is yes. And then you ask, would they have followed it up with another one in May? I think the answer to that is probably yes. So that tells you that they're at least sort of 25 basis points, maybe 50 behind where they probably should be at the moment. And so that's really our argument around the 50 basis point rate cut, that the bank is just simply playing catch up and also acknowledging that there is a little bit of an impetus for them, given global and local developments, to get to a neutral setting more quickly than not.
Sally, as markets rallied after the latest tariff announcement, that of a pause between China and the US on each other's elevated tariffs, bond yields lifted too. What does that mean for recession risks for the US and global economies? Do they remain elevated?
Yeah, that's right. So I think the knee-jerk reaction from markets, as you say, was for bond yields to go up, equity markets to rally, and that was really, I guess, just a response to the fact that, not only did we get an outcome probably a little bit more quickly than investors had anticipated, but also that outcome was probably better than everyone thought. And there had been a sense, I guess, across financial markets that maybe the ultimate sort of settling place for US tariffs on China would be around that 50 to 60% level, because they were the sort of numbers that the now president had talked about ahead of the election in November. And so when that number came out closer to 30, I guess there was a positive surprise for markets, and people started to feel that they had to worry less about what we would call the tail risks or the big downside risks to global growth and growth in China and growth in the US economy, and I guess reacted accordingly. And I think the other sort of issue going on for markets at the moment is that traders aren't running sort of big high conviction positions just because things are moving around so much. So when you do get a piece of news, you can often get a bit of an outsized reaction just because people see, the opportunity in the very short term to put a position on in the market.
Sally Auld, thank you for joining the program.
Thanks very much, Kirsten.